Bridgewater, the world's largest fund with $150 billion in assets, manages investments for institutional clients, including pension funds, endowments, foundations, foreign governments, and central banks. It was founded in 1975 by Ray Dalio, who earned an MBA from Harvard Business School in 1973. Dalio founded Bridgewater 2 years later. In 2013, it was ranked the world's largest hedge fund. His enormous success over the years led him to be named the 79th richest person in the world. Billionaire Ray Dalio takes advantage of the first appearances of stagflation. How? I invite you to watch this video to find out. Stagflation is a term that combines the words stagnation and inflation, meaning that the economy suffers stagnation while inflation does not change its rate of increase. In the United States, specialists have long been predicting a recession and crisis for the country, and leading investors and businessmen have been making their moves for some time now. Ray Dalio is no exception to this game. Like Burry, known for anticipating the 2007 housing bubble, Ray is gradually releasing his shares in the US stock market. Inflation started a long time ago. The war in Ukraine put a brake on the Western economy, holding back raw materials, stagnating industry, and thus the world economy. The move to fix the price of a gram of gold at 5,000 rubles sinks the dollar and the euro against the Russian currency, just the opposite of what the United States and the European Union sought in their massive package of sanctions that Putin does not seem to be worried about, since with the sanctions, he could have sold his gold reserves to buy dollars, yet he changed their value to make it more convenient to buy gold with rubles than with dollars, and thus, one fell swoop, he drove the dollar down by 15%. Putin's war is not only against Ukraine, but against all those who oppose him. So, Putin has the upper hand. He has not printed a single note to revalue his currency, and instead forces those who need Russian gas to pay their debts. Germany tells companies to refuse to accept the deal. However, winter is very hard, and refusing Russian gas is a difficult task. So, with stagflation in the West on his side, Russia has been winning in that regard. A bearish spread strategy is a financial option strategy that seeks to limit both the upside and downside of the underlying asset, taking a small steady loss if the underlying goes up and a limited gain if the underlying goes down. It therefore involves selling shares before owning them, keeping their price low at a controlled level, so that you make limited gains by buying them at an even lower price. If during this time their price remains stable and does not fall below the price at which you bought them, you will have made a profit. During these times the market is down, and many investors decide to sell the stocks they own, such as Michael Burry, the Wall Street guru, who this year sold all his US stocks except Alphabet, Meta, and Discovery by selling his Apple shares without taking his fair share of the profits. Maintaining a bearish strategy in tech stocks and bonds is what Ray Dalio and Michael Burry are doing, while betting on a bullish strategy in commodities. Bridgewater sold its Tesla shares, shedding an investment of 27 million shares, which have fallen 41.9% since January. Taking advantage of the falls, staying in the stock market with technology companies, whose value is falling due to inflation and low demand for their prices, is the strategy followed by the most reputable investors. It is nothing new for them to take advantage of the fallen tree. It is true that with the war in Ukraine, things got complicated in the rest of the world, but not everyone has been bad. The market's uptrend simulates a bought future, i.e., it gains on rises and loses on falls in the underlying, but incorporates a zone around the strike price where it protects against price movements. Buy stocks that go up and hope they go up. Stanley Druckenmiller, billionaire and founder of Duquesne Capital, follows the new bullish trends. Chevron and Coterra Energy are his picks for the big are in the energy and mining sector. Both are up 30% since the beginning of the year. Both strategies are short-term. As long as the economy is bad, and until the banks adjust, the market will oscillate between high prices and low growth. Dalio states that, quote, "The adjustment will be painful and will force central banks to relax their monetary policies, and it would happen in 2024, because that year there will be elections, and they will have to repair the damage for the voters. Bonds are long-term investments. We buy a bond issued by an entity, the state or a private company, and we obtain a fixed income. That is, predictable profitability, since bonds have that virtue, knowing exactly how much will be obtained after the term expiration of the same. The nominal price is the value that the investor will obtain after that term that determines the percentage of the interest that he pays each year, 6 or 3 months through coupons. Bonds, depending on who issues them, are more or less risky. Profitability is related to the credit quality, ability to pay the debt of the issuer, so the worse the credit rating, the greater the risk, and therefore, the higher the profitability offered will have to be for an investor to be interested. Knowing this, we continue. Ray Dalio indicates that the strategy to follow is to consolidate bearish with the bonds, but that Bitcoin is more profitable, despite the great fall it registers and its fluctuations. And according to his criteria, the refuge is in the materials commodities, such as gold, oil, gas, and copper, since the US and European markets fall sharply and will continue to do so. Bridgewater is the largest investment fund in the world, and its investors demand management that gives profitability in times of crisis. So, it has to take exceptional measures and chooses to take advantage of the US economic situation, contributing against US sovereignty. A few days ago, he bet against the Santander and BBVA banks. On June 13th, Ray's investment fund has once again bet short on BBVA and Banco Santander, as a position of more than 0.5% emerged in both entities, according to the notification sent to the National Securities Market Commission, CNMV. In BBVA, it has registered a short position of 0.510%, and in Santander of 0.520%. In Europe, the fear of recession is also present, and the banks have recorded profits, but perhaps the increase in interest rates does not control the sector's interest margins. However, a slowdown could mean a halt in demand of credit. Quote, "The possibility that the banking sector enters a spiral of lower activity, the increase in delinquencies, and the increase in provisions is blocked in the mood of investors," explains Joaquin Robles, an analyst at XTB. For Dalio, the storm will arrive at the end of summer in Spain. Inflation is running rampant, and the economy is stagnant. The strategies of the great investors are to be used both as an example and to uncover reality and observe without filters. It is not about investing and winning. With these times, you are probably lucky if, with the information you obtain, you manage to beat inflation and the future crisis. The following quarters will continue like this, according to Dalio. Inflation is here to stay and give consumers a fight. The war in Ukraine complicates the picture. The war was not unleashed for nothing. That territory provides the rest of the world with large quantities of important raw material for the development of the world economy. Whoever has the chicken owns the eggs. Dalio estimates that inflation will rise more than estimated by the Federal Reserve and is supported by data from the OECD and the World Bank. The alarms are sounding and the strategies are in play. Stagflation is that point where inflation does not stop and the economy is stagnant, and where investments and decisions are key to defining the economic future of our investments and purchases. Taking advantage of these opportunities is key. As Ray and Burry, they make firewood from the fallen tree, bet against bears, and take refuge in raw materials. What did you think of today's video? Are you a bearish investor, or do you join the bullish trend? Leave your opinion in the comment box.